Use your credit to your advantage now. Stop losing money paying interest that enriches the bank. Most people spend their entire lives believing they have a money problem when, in reality, they have an information problem. They wake up early, work hard, sacrifice their time, deal with stress, and carry responsibilities that never seem to end. Then payday arrives, and for a brief moment, they feel relieved. But only a few days later, the money starts disappearing. Bills, subscriptions, installments, credit card payments, interest charges. By the time the month is over, there is almost nothing left. So they come to the same conclusion that millions of others have reached. I just need to earn more. But what if that belief is exactly what keeps people trapped? What if the biggest obstacle between you and financial freedom is not your salary, but an invisible system that quietly takes a piece of everything you earn? Banks understand something that most ordinary people never learn. They do not need to take all your money at once. They only need to collect small amounts from millions of people over and over again. A little interest here, a late fee there, a purchase divided into 12 easy installments. One decision alone changes almost nothing. But dozens of these decisions, repeated month after month, quietly create a financial leak that grows larger every single year. Society has normalized debt. People celebrate getting approved for larger credit limits as if they became richer overnight. They convince themselves that because the monthly payment is small, the purchase must also be small. But every installment steals a piece of your future income. Every unnecessary interest payment delays your financial independence. And while millions of people are trapped inside this cycle, another group is using the exact same financial tools in a completely different way. They have credit cards. They have access to loans. Yet they are not drowning in debt. The difference is not that they were born wealthy or work harder than everyone else. The difference is that they understand the rules of a game that most people do not even realize they are playing. Credit itself is not the enemy. Ignorance is. Banks do not become wealthy because people borrow money. Banks become wealthy because people misunderstand how borrowing money really works. And once you understand that hidden mechanism, you stop being the product and start becoming the player. Credit was never created to help you. There is one idea that almost everyone accepts without questioning. If the bank offers you credit, it must be because the bank wants to help you. Commercials show smiling families buying dream homes, young couples traveling the world with reward points, entrepreneurs growing businesses with easy financing. It feels as though the financial system exists to create opportunities. But if that were completely true, why are so many people working harder every year while feeling poorer at the same time? A bank is not a charity. A bank is not your financial partner. A bank is a business, and like every successful business, its main objective is to generate profit. The question almost nobody asks is, what kind of customer is actually more profitable? The person who pays the credit card bill in full every month, or the person who constantly carries a balance, pays interest, refinances debt, and accumulates fees? The answer is obvious. Someone who always pays interest is extremely valuable to the bank. This is why financial institutions spend billions of dollars every year creating products that feel safe, convenient, and even exciting. Higher limits, pre-approved loans, instant financing. Buy now, pay later. Every feature is designed to remove friction from spending and make borrowing feel normal. Think about the language they use. They rarely say take on debt. Instead, they say unlock your dreams. They do not say pay us interest for years. They say affordable monthly payments. They sell comfort. They sell convenience. They sell the feeling that you deserve something immediately, even if your future self will have to pay for it. The human brain naturally values immediate rewards more than future consequences. Psychologists call this present bias. Your brain feels the pleasure of owning something today much more intensely than the pain of paying for it months later. Banks understand this better than most people understand themselves. Life is rarely destroyed by one huge financial mistake. It is usually destroyed by hundreds of small decisions that seem insignificant in the moment. A streaming subscription here, a financed phone there, a vacation installment, a credit card balance carried over just this once. Little by little, your future income starts getting divided before you even receive it. The most dangerous part is that society often rewards this behavior. Someone drives a brand new car, and everyone assumes they are successful. But appearances can be financed. Real wealth cannot. Real wealth is having assets that generate security, freedom, and options. Real wealth is sleeping peacefully because your future income already belongs to you. The wealthy often use credit for convenience, security, rewards, and cash flow management. The average person often uses credit to close the gap between desire and reality. One group stays in control, the other slowly gives control away. The illusion of instant financial freedom. Almost everyone remembers the first time they received a credit card with a decent limit. Suddenly, possibilities appear out of nowhere. The vacation that seemed impossible now looks affordable. The expensive phone no longer feels out of reach. Nothing in your bank account has changed. Your salary is exactly the same. But your mind begins to believe that your financial reality has improved. This is one of the greatest psychological illusions ever created. The moment people mistake access to money for ownership of money, they begin walking down a path that becomes harder and harder to leave. The financial system understands a simple truth. People rarely spend according to what they own. They spend according to what they believe they can afford. Studies have repeatedly shown that people naturally spend more when using credit than when using cash. The reason is simple. The pain of paying has been delayed. Your brain receives the reward immediately. The consequence arrives weeks later. This cycle slowly changes the way people define wealth. Many start measuring success by what they can buy instead of what they actually own. Social media has made this illusion even stronger. Every day, people see pictures of luxury vacations, expensive restaurants, and designer brands. Very few see the monthly payments, loans, and anxiety hidden behind those images. Then something subtle happens. The paycheck no longer feels like income. It feels like a rescue operation. Instead of deciding where their money should go, people discover that most of it already has a destination before it even arrives. That is why many individuals receive raises at work but never feel richer. The extra money simply fills holes that previous spending habits created. A larger salary without a change in financial behavior often leads to larger debts, not greater wealth. This is known as lifestyle inflation. Financially intelligent people rarely see a credit limit as extra money. They see it as a tool that allows them to organize expenses, protect their cash flow, and collect benefits while keeping complete control. If they cannot pay the full balance today, they simply do not buy it. That single habit separates two completely different financial futures. The invisible cost of small monthly payments. If someone asked you whether you would rather pay $2,000 today or $166 a month for the next year, most people would not even hesitate. The smaller number feels lighter. It feels manageable. And that is exactly why the modern financial system is built around monthly payments instead of total prices. Banks, stores, and financial companies understand that people do not usually make buying decisions based on value. They make decisions based on what feels comfortable at the moment. Advertisements do not say, "This couch will cost you $2,000. They say, "Take it home today for only $55 a month." The objective is to make the payment look invisible. One small payment for a streaming service, another for a smartphone, another for a car, another for furniture. Individually, each payment seems harmless. Together, they quietly build a wall between you and financial freedom. The strange part is that most people cannot even tell you how many monthly payments they currently have. Every monthly payment is a promise your future self has already made. Part of next month's salary no longer belongs to you. Without realizing it, people begin selling pieces of their future one installment at a time. When life happens, car repairs, medical expenses, unstable work, the financial flexibility that once existed is gone. Not because the person does not earn enough, but because so much of tomorrow's income was already spent yesterday. The wealthiest individuals understand a principle that sounds almost too simple. They do not ask themselves, "Can I afford the monthly payment?" They ask, "How much of my future am I giving away for this?" That single question changes everything. The people who truly build wealth are not necessarily the ones who earn the most. They are often the ones who protect their future income better than everyone else. Why wealthy people think differently about debt. Most people grow up hearing one of two opposite messages. The first says that all debt is bad. The second says debt is simply a normal part of adult life. Neither idea tells the whole story. Wealthy and financially successful individuals do not necessarily avoid debt. They avoid becoming servants to it. The average person usually asks one simple question before making a financial decision. Can I make the monthly payment? If the answer is yes, the purchase feels justified. It does not matter if the total cost is much higher because of interest, or if the obligation will reduce financial flexibility for years. People who build wealth ask completely different questions. Will this purchase increase or decrease my future freedom? Will this create value or simply create another obligation? Will this make money for me, or will it only cost me money? This is one of the biggest differences between a consumption mindset and an ownership mindset. A consumption mindset sees money as something to be exchanged for experiences and immediate satisfaction. An ownership mindset sees money as a tool that can be transformed into assets capable of producing even more money. This is why many wealthy individuals appear surprisingly ordinary. Some drive older vehicles. Some live below their means. It is not because they cannot afford more. It is because they understand the hidden price of constantly upgrading a lifestyle. Every dollar that buys an unnecessary liability is a dollar that cannot be invested somewhere else. This concept is called opportunity cost. Most people never calculate it. Wealthy people often appear patient. They are not simply delaying gratification. They are protecting future opportunities. They understand that income is important, but control over that income is even more valuable. A person earning $5,000 while keeping $4,000 may build more wealth than someone earning $10,000 but spending $9,500. A person who saves before spending is difficult to profit from. A person who pays every credit card bill in full quietly removes one of the largest sources of bank profits. The interesting part is that wealthy people often reward themselves too. The difference is timing. Many delay temporary pleasure in exchange for permanent financial security. One avoided interest payment becomes two become 20. Eventually, the gap between two people with similar salaries becomes enormous, not because one worked harder, but because one learned to make money work for them. How your behavior is worth more than your salary. Most people believe that financial success begins with earning more money. But if that were true, why do so many high-income professionals live under constant financial pressure? Why do athletes and celebrities who earn millions sometimes end up bankrupt? And why do some ordinary people with average incomes quietly build wealth over the course of their lives? The answer has very little to do with money itself. It has everything to do with behavior. Your salary determines how much money enters your life. Your habits determine how much of that money stays. Think about two people earning exactly the same amount every month. The first receives their paycheck and immediately starts spending, upgrades their phone, buys clothes on sale, orders food because cooking feels inconvenient. At the end of the month, they honestly cannot understand where the money went. The second person earns the same amount. But before spending anything, they make one simple decision. They pay themselves first. A portion goes into savings, another portion goes into investments. The remaining money becomes the spending limit for the month. 5 years later, their lives look completely different. One is trapped. The other is free. The difference was never income. The difference was behavior, repeated consistently. Human beings are emotional creatures pretending to be rational. Many financial decisions happen because of emotions. People shop when they feel stressed. They spend when they feel bored. They buy expensive things to celebrate achievements. Modern marketing understands this perfectly. Advertisements rarely focus on logic. They focus on identity. They do not sell watches. They sell status. They do not sell cars. They sell success. There is also another psychological force working in the background. People naturally adapt to improvement. A new car feels exciting, then becomes normal. A salary increase feels life-changing. Then the extra money disappears into a more expensive lifestyle. Psychologists call this the hedonic treadmill. The more people have, the more they believe they need. Financial discipline is not about denying yourself everything. It is about learning the difference between temporary pleasure and permanent progress. Every financial decision is really a vote for the kind of future you want to create. Every unnecessary purchase says, I choose comfort today. Every smart investment says, I choose freedom tomorrow. Habits do not create results overnight. They create direction. A person who saves a little every month may not feel different after 30 days. After 10 years, the difference becomes impossible to ignore. Financial freedom is rarely won through one brilliant investment or one lucky opportunity. It is usually built through ordinary decisions repeated over and over again. The silent method to turn credit into wealth. By now, you may be thinking that the only way to stay financially safe is to avoid credit altogether. But that is not how financially intelligent people think. Credit itself is not dangerous. Lack of control is. A hammer can build a house or break a window. The tool is not the problem. The way it is used determines the outcome. Most people use credit to buy things they cannot currently afford. Wealth builders use credit to organize money they already have. That single difference transforms credit from a trap into a strategy. Imagine two people buying exactly the same item. The first uses a debit card. The money leaves their account immediately. The second uses a credit card, not because they lack the money, which is already sitting safely in their bank account. They simply allow the purchase to remain there until the statement closes. During that time, their cash stays available for emergencies. Then they pay the entire balance in full. No interest, no debt, no financial stress, only organization. Financially disciplined people often use credit because it protects their cash flow. Cash flow is not just about how much money you earn. It is about controlling when money enters and when it leaves. People who master this concept gain flexibility. Flexibility creates security. Security creates opportunities, and opportunities often become wealth. Another advantage comes from rewards programs. Cashback, travel points, and purchase protections can become valuable tools if used correctly. A financially educated person never changes spending habits to collect points. They simply collect benefits from purchases they were already going to make. Groceries, fuel, insurance, monthly bills. There is another silent strategy that separates disciplined people from impulsive consumers. They treat their credit card statement as if it were already due the moment they make a purchase. The money mentally leaves their account immediately. This simple psychological adjustment prevents one of the biggest causes of financial stress: spending tomorrow's money before tomorrow arrives. Over time, this approach creates an effect that almost looks invisible. Someone who never pays interest quietly keeps thousands of extra dollars. Someone who consistently invests that money begins generating returns. Those returns generate even more returns. Years later, the same credit system that once could have trapped them has actually helped preserve and multiply their wealth. Banks often make the least amount of money from the customers who understand the financial system best. They pay on time. They avoid penalties. They never carry unnecessary balances. They use the services, but they refuse to become the product. That is the silent method. Not avoiding credit, not fearing credit, simply refusing to let credit control your future. The snowball effect that can work against you or for you. There is one financial force so powerful that it quietly shapes the future of almost every person on the planet. Yet most people barely understand how it works. It is the snowball effect, also known as compound growth. This force has no emotions. It does not care whether you are rich or poor. It simply follows one rule. Whatever direction you give it, it accelerates. If you consistently build good financial habits, it quietly multiplies your progress. If you consistently make poor financial decisions, it quietly multiplies your problems. One person decides to carry a small credit card balance from month to month. The interest seems insignificant. The other person refuses to pay unnecessary interest and sends that same amount into investments. After 1 month, there is almost no visible difference. After 1 year, the gap is still small. But time changes everything. The person paying interest experiences negative compounding. Interest begins generating more interest. Debt creates additional debt, and the financial burden becomes heavier, even though the original spending may have happened years earlier. The person investing experiences positive compounding. Returns begin generating new returns. Small contributions start producing growth that no longer depends entirely on new deposits. Eventually, money begins working alongside effort. This is one of the greatest hidden battles in personal finance. Many people believe they are competing against inflation or low salaries. In reality, many are simply competing against the direction of compounding itself. Every month, they are feeding a machine that grows stronger against them. Imagine applying the bank's own principle to your own life. Instead of sending small amounts to interest, you keep them. Instead of using future income to pay for past decisions, you allow today's discipline to create tomorrow's opportunities. At first, the results appear disappointingly slow. This is the stage where most people quit. Compound growth starts almost invisibly, but eventually, something remarkable happens. The growth itself begins creating additional growth. The process no longer depends entirely on you. Your previous discipline starts helping your present discipline. That is why many financially successful people say that the first $100,000 is often the hardest to build. Later, the system you built begins helping you. Financial freedom rarely happens by accident. The snowball effect is always rolling. The only real question is whether it is rolling in your favor or against you. The future does not change because of one extraordinary action. It changes because ordinary actions are repeated long enough for compounding to take control. The money you have been sending to banks through interest could have been building your own financial future all along. The day you stop feeding someone else's snowball may be the exact day your own finally starts to grow. The day you stop financing someone else's dream. Take a moment and imagine two different versions of your future. In the first one, nothing really changes. You keep doing what most people do. You work hard, you receive your paycheck, you make your monthly payments, you tell yourself that next month will be different. Then next month arrives and the cycle repeats. Years pass. Your income may even increase. But somehow, real financial peace always feels just out of reach. There is always another payment, another obligation waiting for money you have not even earned yet. Now imagine a second future. Not one built around earning twice as much. Not one based on winning the lottery. A future built on one simple decision. The decision to stop making banks richer with money that could have been building your own life. This change does not happen overnight. It starts quietly. You pay off one unnecessary balance. You stop using installments for things that lose value. You begin paying every credit card statement in full. You create a small emergency fund. At first, nothing around you seems different. But inside, something has changed. For the first time, your future income starts belonging to you again. People often believe wealth is about owning expensive things. In reality, one of the greatest luxuries in life is waking up knowing that your money is not already spoken for. Freedom is not having the ability to buy everything you want. Freedom is having the ability to say no because you no longer need to impress anyone. The financial world spends billions convincing people that success should be visible. A bigger house, a newer car, a luxury watch. But many of the people displaying those symbols are quietly carrying enormous financial pressure. Their lifestyle is supported by future income that has already been promised away. The truly wealthy often build something much less visible. Options. The option to leave a stressful job. The option to help family members without creating personal hardship. The option to handle emergencies without panic. The option to retire with dignity. The option to spend time where it matters most instead of constantly chasing the next paycheck. Those options are rarely purchased. They are accumulated, little by little, month after month, decision after decision. This is why financial freedom is not really about money. It is about ownership. Do you own your future, or does someone else already own part of it? Every unnecessary interest payment is a transfer of possibility. It is money that could have become an investment, a business opportunity, security, peace of mind. Instead, it became part of someone else's balance sheet. The truth is that financial freedom is rarely stolen in one dramatic event. It is usually traded away voluntarily through thousands of small decisions that seem harmless at the time. But the opposite is also true. A better future is built through small moments of discipline that nobody else sees. Choosing to wait. Choosing to save. Choosing to invest. Choosing to let your money build your dreams instead of financing someone else's. There comes a moment in almost every successful financial journey when a person realizes that banks were never responsible for their future. The economy was never fully responsible. Their employer was never fully responsible. The greatest financial decision they ever made was deciding who would benefit from their discipline. The institutions collecting interest or the family they wanted to protect. The life they wanted to create. The freedom they wanted to experience. Because every single day, whether people realize it or not, they are making that choice. And the day you stop financing someone else's dream may be the exact day your own finally begins.